Silver dropped below $84 this week, triggering speculation of a reversal, but the real story isn't the dip, it's what's holding it up. While traders locked in profits after a strong rally, the broader structure of the market remains firmly bullish. That contradiction, price retreating while momentum holds, creates a critical question for holders and traders alike. Is this a buying opportunity masked as weakness, or the calm before a deeper correction? The answer lies not in the headline move, but in the layers beneath. The immediate cause was clear. After climbing toward multi-month highs, silver slipped under $84 amid profit-taking. Market sentiment cooled slightly, supported by a stable US dollar and mixed performance in global equities. On the surface, that could look like fading strength, but analysts point to a more nuanced reading, one where technical indicators, macro forces, and industrial fundamentals are still aligned to support higher prices over time. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. From a technical perspective, the retreat is behaving like a textbook consolidation. The Relative Strength Index, RSI, on the daily chart had climbed above 70, signaling overbought conditions, and has now pulled back to around 65. That cooling relieves short-term pressure without breaking the uptrend. More importantly, key support at $82.50, which aligns with the 20-day exponential moving average, EMA, continues to hold. As long as that level stands, the technical case for a sustained correction remains weak. Resistance looms at $85.50, with the psychological $86 level just beyond. A decisive move above that zone, especially on strong volume, would reconfirm bullish momentum. But the technicals alone don't tell the full story. The macro environment is quietly shifting in silver's favor. Expectations that the Federal Reserve could begin cutting interest rates in the second half of 2025 have already started to weigh on the US dollar index, DXY. A weaker dollar reduces the opportunity cost of holding non-yielding assets like silver, making it more attractive to investors. That dollar correlation is a powerful tailwind, and one that's embedded in the current silver price forecast. Beyond monetary policy, safe haven demand remains elevated. Persistent geopolitical tensions and concerns about global economic growth continue to drive capital into precious metals. Silver benefits from this flow, even if gold tends to dominate headlines. Unlike gold, though, silver carries an additional catalyst: industrial demand. Nearly half of all silver consumption comes from industrial applications, particularly in solar photovoltaic cells. The International Energy Agency, IEA, projects over 20% growth in solar capacity additions in 2025, directly boosting silver consumption. That demand floor acts as a structural support, limiting how far prices can fall during speculative pullbacks. The important part is not just that silver is holding support, it's that multiple independent forces are reinforcing it. The profit-taking was expected. What wasn't guaranteed was whether the underlying drivers would remain intact. And so far, they are. The silver uptrend intact narrative isn't just a technical observation, it's backed by real-world demand and shifting monetary policy. Still, risks remain. A sustained break below $82.50 could shift the short-term bias to neutral and open the path toward $80. That level represents the next major support zone, and losing it would signal deeper distribution. On the other hand, a breakout above $85.50 could accelerate momentum toward $88. The range between $82.50 and $85.50 is now the battlefield for the next phase of price action. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Looking ahead, the silver price forecast hinges on two key variables: upcoming U.S. economic data and Fed commentary. Inflation reports and central bank signals will shape expectations for rate cuts, which in turn influence both the dollar and investor appetite for commodities. Any hawkish pivot could pressure prices, while dovish signals would likely reinforce the current setup. The industrial demand angle adds resilience, but it doesn't eliminate volatility. Solar sector demand is growing, but it's not immune to supply chain shifts or policy changes. And while safe haven flows provide support, they can also reverse quickly if risk appetite returns. The dual nature of silver, as both a monetary metal and an industrial commodity, creates complexity, not certainty. Another factor to watch is volume. A breakout without strong participation may fail, while a breakdown on low volume could be dismissed as noise. Traders should treat the current range as a digestion phase, not a resolution. The market is waiting for a catalyst, whether data, policy, or external risk, to determine the next leg. This silver price forecast isn't about predicting a single price target. It's about understanding the balance between profit-taking pressure and structural support. The dip below $84 wasn't a reversal, it was a reset. And as long as support holds and macro conditions remain favorable, the path of least resistance still points higher. The next signal to watch is clear. Watch how price reacts at $82.50 and $85.50. Those levels won't just guide short-term moves, they'll confirm whether the uptrend has truly weathered the pullback.